Hello and welcome to today's webinar, Elevate Your Subscription Model Business, Streamline Indirect Tax and Billing for Global Growth. I'm Kelly Miranda and I will be facilitating today's session. Please direct your questions to the Q&A tool on the bottom right of the screen and we will address them at the end as time permits. I will now hand over to Mark Fulton, Partner Development Manager at Vertex.
Thank you, Kelly. Hello, everyone, and thank you all for attending this webinar. The best part of being a partner manager at Vertex is I get to work with technology partners like Recurly. As partners, we get up every day to help customers solve their most pressing tax and revenue challenges. Recurly is a trusted long-term technology partner of Vertex with a pre-built Vertex integration. So companies come to Vertex and Recurly daily to solve their complex challenges of subscription management, recurring billing, and tax with the goal of enhancing compliance and efficiency. So with that, it is my distinct privilege to introduce Robbie Terrell, VP of Accounting at Recurly, and Andy Hellsworth, Solution Engineer at Vertex. The floor is yours. Take it away.
Thanks, Mark. I appreciate the opportunity, and we benefit greatly from the partnership that we have with Vertex. Before I jump into the partnership model, let me provide a brief introduction to Recurly. Recurly is your consumer subscription growth expert. The combination of our unique partnership model and platform built for high-volume consumer subscriptions is what delivers faster, more profitable subscriber growth for our merchants. With Recurly, you will move faster from product launches to testing and optimizing plans, to using our expertise and tools to cut down churn with proactive techniques and revenue recovery tools, to giving you confidence with a proven partner that has helped grow major consumer subscription brands expand and scale their business globally. Our combined partnership and platform deliver faster, more profitable growth. Now onto the Recurly partnership model. In the middle, you'll see that there is the subscriber. The subscriber is at the heart of everything we do. Recurly is a platform and a team that can help you better understand and deliver on what your subscribers want. We uniquely focus on business to consumer subscriptions, which has anchored our people, our platform, the data and trends we track, and the best practices we've developed for accelerated profitable subscriber growth. We are uniquely partner with our customers to apply our expertise in growing consumer subscriptions. And we have been perfecting what looks good for many years by working with some of the largest and most recognizable streaming and publishing brands, consumer software companies, business and professional service organizations, and many other subscription businesses we are proud to call our customers. We are, and always have been, focused on consumer subscription revenue models. From our people, resources, and experts, our product investments, and even our partner ecosystem, you will find a uniquely built around growing revenue for consumer subscription businesses. The next ring is data and insights. Recurly helps you run your subscription business smarter with rich data and benchmarking reporting that's readily accessible and digestible. By continuously analyzing billions of consumer subscription transactions across thousands of merchants doing business worldwide, we can partner with you to benchmark your performance against these data sets to identify actionable opportunities to refine and pivot your business towards faster, more profitable growth. This could span from understanding which plans or promotions are converting best for your subscriber cohort, what type of payment method is preferred in certain countries to increase conversion, and to use to train our churn management and payment retry engines to maximize payment success rates and increase retention. The next ring is expertise. While there are other subscription platforms on the market, Recurly is uniquely positioned to serve the consumer subscription base. Our experience from founding has always been anchored to optimizing high volume, high velocity recurring revenue streams consistent with consumer card-based transactions. This requires expertise across complex payment supply chains and replacing any friction during billing and account change events with seamless, flexible billing and payment experiences that exceed the preferences and expectations of today's savvy consumer subscribers. From continuously testing and optimizing your plans, pricing, or promotion strategies to improving conversion during online checkout, to launching new products or expanding into new geographies, to building a global payment gateway strategy that will deliver the highest payment success and the preferred payment methods your customers want, to expertise in proactively preventing churn from payment failure, minimizing chargebacks and payment fraud, to recovering over $1 billion in revenue each year for our merchants when a customer does cancel. Recurly has the expertise and impressive roster of successful merchants that prove we are the expert in your industry. Now on to our people, which is the final ring in our partnership model. Recurly's company culture is founded upon merchant partnership and expertise. It's in our DNA to partner with our merchants at every step of their life cycle as a Recurly customer, applying a consultative approach with domain experts in high volume subscription billing models and diverse payment optimization strategies. Through that, we refer to our growth optimization team. We refer to as our growth optimization team. We are invested in applying this unique consumer subscription knowledge, starting with our first sales call and product evaluation, to ensuring that we understand your business case and bring the right experts to the table, and ensuring that we solve for them. And if not, we're happy to let you know that as well. This partnership then expands to our rapid package onboarding services by Recurly's expert team through continuing joint success planning and technology and process optimization that knowledgeable CSMs, support professionals, and even our product and engineering teams when appropriate. At the end of the day, our success is directly reliant on helping profitably grow your business, and our life cycle of services and expertise is how we help you do this. And we put our money where our mouth is. Our pricing model is tiered to your revenue growth and performance. Here at Recurly, we want you to be part of our community. Our VIP customers get early access to product launches and get to participate with customer advisory boards for roadmap feedback and review. Our communications teams make sure that you're aware of monthly product updates, providing technical support when you need it. And finally, we believe in education. Through both customer and partner events, benchmark materials, and Recurly Academy, which is our learning and certification platform. The Recurly platform vision believes a billing experience enhances the overall subscriber experience, yet should simply get out of the way informed decisions. This reduces friction and improves conversion and subscriber satisfaction. Grounded in billing, intelligence is extracted from billing, marketing, customer events. Recurly optimizes performance and life cycle experience. Recurly customers benefit from 12 plus years of customer-driven development, feedback, and a test-driven culture of validation. Recurly meets the needs for DTC businesses, meeting subscribers, and businesses where they are within the subscriber lifecycle, and providing deep wells of functionality alongside the lifecycle progression, including acquisition with plans, pricing, and promotions, to managing the subscriber relationships and maintaining those relationships with seamless payment orchestration and recurring billing. Recurly believes subscriptions are more than isolated facets of functionality, acquisition, churn, and analytics. Rather, it is how we all those things work together to create and maintain a long subscriber relationship. A core Recurly value, say, yes, we iterate everything to encourage intellectual curiosity. We collaborate with our customers to prove results together, augmenting the high volume, high velocity D2C business our customers create. And we maintain close relationships with payment card brands, payment processors, and security experts for deep expertise. Along with the Recurly platform, we have also expanded our ecosystem to include external partners for their deep knowledge and expertise. As a trusted Recurly partner, Vertex continues to develop and deliver innovative tax solutions to help customers extend the value of the Recurly platform, streamline tax determination and compliance, and accelerate business growth. With that, I'd like to hand the presentation to Andy to run through the specifics on indirect tax, reporting and billing challenges and opportunities.
Great, thanks for that, Robbie. Good stuff. Hello, everybody. I'm Andy Halseth here at Vertex. I'm one of our solution engineers, a product specialist, if you like. But by background, I'm a VAT specialist too. I've been doing VAT for almost 25 years now. Started at the Big Four or the Big Six many years ago. I was the in-house VAT person at Oxford University for many years, where perhaps I learned the difference between knowing a lot about VAT and making VAT, GST work in systems. It's quite a different challenge. So with that background, I'm really excited to speak to you today, just to bring up, I suppose, some of those challenges of growing your business through systems like Recurly, the opportunity to grow your business across the world like never before. It comes with challenges, but challenge, it's just another word for opportunity, really. There's ways to manage these challenges that can help grow the business. Now, I picked up on a couple of things Robbie mentioned there, things like global expansion, frictionless, the ability to scale confidently. These are key themes I'm going to come back to as we talk about the challenges of going global from an indirect tax point of view. So, I suppose everybody on this call, what we're interested in is growing that business. Although I've been in VAT forever, I appreciate it is not the thing that business is most interested in. Business is interested in opportunity and growing, and systems like Recurly, like never before, giving business the chance to grow, to reach a wider audience, to start to sell anything to anybody, anywhere, not just a narrow range of services, but proliferating out into goods, or vice versa. Traditional goods sellers finding niche ways to sell services into the market, tapping into possible opportunities like never before. The opportunity is there, the ability to go global is there, but of course, customer experience, really, really important. You want this to be smooth and seamless for your customers, because that will enable you to sell more, it will enable you to grow somewhat more. But with growth, the downside to growth and success is the level and depth and breadth of complexity that you're going to find. A theme I'm going to come back to again is regulatory change. The world is not standing still around us. More and more things are happening in VAT, GST, indirect tax world that are requiring businesses to take note of those, to make sure they become compliant. Some of these complexities of going global as well, it's things like being able to be sure you're checking your customer VAT IDs. Come on to this a bit more. It's a niche area, but really quite important. The ability to literally know where your customer is located, very important to be able to get the tax right in the right places. As you go around the world, keeping track of thresholds, how much are you selling into certain locations? Do you have requirements to think about charging local tax? And at the end of it all, statutory reporting, proper compliance, if you like, getting tax to the government at the right time. The opportunities of growth have increased along with the requirement to manage complexity. These are just some of the areas that we're going to come across. Things like, as you go global as well, requirement to issue invoices in the right way for the local government. And we'll come on a little bit more to things like e-invoicing, quite a hot topic across all kinds of industries just now. It's not a flag quiz. You don't need to know the countries here particularly, but hopefully what this is making clear, this is the direction of travel. Here is a graphic to represent those countries that have introduced some kind of digital reporting or electronic invoicing over the last few years. As you can see, the flow of traffic is only one way. It's up. More countries are requiring you, business, to comply with more things than ever before. The general concept of taking nothing away. Tax authorities are wanting more of your data, more invoice data, more quickly than ever before. And this trend is only going to continue upwards. It's It's only something we're seeing here in Europe, but around the world as well. In Europe, well, in the EU at least, you may come across something known as VIDA, VAT in the digital age. At this stage, just a proposal by the European Union, but a proposal that's being taken pretty seriously by not just member states in the EU, but the concepts of it, very much chime with what tax authorities elsewhere in Europe are thinking about, and indeed it chimes with what's going on in many parts of the world. That EU VIDA proposal, it has a few areas of particular interest around simplification, perhaps rather than having to register everywhere, having single registrations for VAT purposes. This is within the EU, thinking of smarter ways, if that's the right phrase, to tax platform economy, to make sure that tax doesn't somehow slip through the gaps. And one of the key central elements of this, as I alluded to on this slide, digital reporting, more data from you, business, more quickly than ever before. So if this isn't already on your plate, as you look to grow globally, be ready. Be ready, because either there are things there you need to comply with today, or as you expand elsewhere, new rules will be coming in that require you to comply there as well. And a little bit of background, I suppose, where I'm talking about this, as things are increasing, the requirement to think about not just digital invoicing and the like, but taxing worldwide. Where did this come from? Well, guess what? The tax authorities all around the world have got gaps in their budget. They would like to have some neat ways to fill those gaps. And not that many years ago, tax authorities around the world got wise to the fact that, hang on, there's lots of non-local, very large organizations selling things to consumers in my country. Not only is that putting local companies at a disadvantage because these, let's say, US organizations are not charging tax because they're not local, the tax authorities realized it's very easy relatively to institute new legislation that said, if you are supplying digital services or of any type into my country, to consumers in my country, I would like the tax from you, please. Designed initially to capture the big people. You don't need me to tell you what those logos are, but these are the kind of organizations where tax authorities could get an immediate large amount of money from having these kind of organizations comply. The follow-up to that is, it's not just for these organizations, it's for everybody. And for people running subscription models, a lot of those subscriptions are likely to fall within the context of digital services. It's these digital services that tax authorities are really keen to tax around the world. It's relatively easy money for them. Even in EU, which has been quite advanced on this, it wasn't that long ago that the likes of you and I, we were being charged Luxembourg VAT for those downloaded sales we were getting within the EU pre-Brexit. Why was that? That's because EU legislation wasn't smart enough to realize at that point to allow actually tax should be where people are located, where tax is consumed. But that is very much the pervading way it's working now. Those businesses providing digital services, subscriptions, if you like, going to have to be charging VAT where the customer is located. More and more countries are just enacting this legislation. You as business are going to have to meet these requirements more and more. And this itself leads to a number of challenges, especially in the world of digital services. If you're expected to charge VAT where your customer is located, and VAT is shorthand there for GST, sales tax, consumption tax, whatever it may be, you need to be assured where is your customer located. Not as easy a task as you might think, but you need to be able to pinpoint, to prove out to tax authorities, this is why I'm charging tax in a particular location and not another, because again, tax authorities are not one big happy family. They're interested primarily in their own tax take. So for those of you looking to expand, especially in B2C world, that's where most of the time tax authorities want you to register locally and charge tax locally. but also as well, in some countries, B2B transactions also going to be subject to tax. Places like South Africa, places like Switzerland, even if you never set foot there, if you're selling B2B, you may be expected to come and charge local tax in those countries. Most other places, you're not charging tax or registering locally on B2B transactions, but guess what? You need to be able to prove out to the tax authorities that you know for sure that your customer is in business. You have to literally check and validate their VAT ID. So when it comes to audit, you can prove out the reason I didn't charge tax or register locally is because I'm assured that entity was in business with a valid VAT ID. It sounds like a real bit of minutiae, and it is. But if you don't do that, tax authorities have the ability to say, you know, as far as we're concerned, that was a B2C transaction. We will have your tax, please. And we'll have your tax retrospectively, and we'll put penalties and interest on top of that. In VAT, GST, sales tax world, prevention is always better than cure. Get things in line ahead of time. Be prepared for where you're going to go, and things will run a lot smoother, not just in terms of tax compliance, but in terms of growing your business, in terms of customer experience. Also, as part of these legislative enactments, reporting is part of that. Invoicing can be part of that. If you're supplying B2C digital services to Saudi Arabia, you're expected to raise an invoice that is at least in part in Arabic. If your customer is in Serbia, it's expected to be in Serbian. If it's in Belarus, then you're expected to have the word invoice on the top of that invoice. Little nuances that, if you want to be compliant, you need to meet those. And being compliant isn't just a nice thing to do. Being non-compliant gives the tax authorities the opportunity to, go back and consider your tax take in those locations. So, as an old-fashioned VAT person, it was always our job in life to be seen as the people putting the brakes on business. You can't do that because there are VAT issues or something of that nature. But nowadays, it's tax. I think we like to see ourselves as something that can help business grow, not just to put the anchor down when things look bad, to be ahead of the game. Those things we talked about before, those opportunities for growth. If you as a business or the tax teams within your business or finance teams can be ahead of the game, be prepared for what am I going to need to get in place to be able to hit the ground running and meet my compliance requirements, then all the better. That complexity, it's a bit cheesy perhaps, but that complexity becomes a potential opportunity for your business. If you're ahead of the game, you can get to market quicker, you can expand quicker. Bottom line, you can grow your business quicker than perhaps competitors who didn't have quite as much foresight to get everything aligned ahead of time, to have that strategy for business growth. And one of those elements of business growth, because VAT is never going to lead a business, but one of the elements for business growth is to make sure you've got your compliance ready to go so that as you grow, you can grow quickly. You're going to a new market. A new market could be a new geographical location. It could be diversifying into a new range of services or goods that become chargeable to tax in a different way or reportable in a different way or give you a requirement in a new country. But if you can be ahead of the game, both in terms of knowledge and in terms of systems, and dare I say, this is where Vertex comes in, helping you with that consistency and being ahead of the game of having in place what you need to meet requirements, then all good. It will all lend itself to the opportunity to grow your business in the quickest and most seamless way. And two things that used to be, antonyms, if you like, the opposite of each other, but are now kind of synonyms. The way tax authorities expect business to operate and the way business wants to operate come to mean the same thing. Tax authorities now talked about digital reporting and e-invoicing. The phrase touchless compliance. Tax authorities just want you as business to get your tax right, first time, every time, to comply in a straightforward manner, and generally speaking, sooner than ever before. Not in the old days. Perhaps you had a month at the end of the quarter to get your numbers right to go on tax returns. Now, they don't want people playing around in Excel. They want data to be got right in source systems first time, and the tax they're in right first time, and that data seamlessly flowing downstream, whether that's from systems like Recurly into background ERPs, into tax returns. Tax authorities want that to be as touchless as possible. And the good news, business wants frictionless commerce. These things are not dissimilar. You want to go at the speed of business. You want to get there first. You want as little to get in the way. So the good news is being compliant for tax is going to go hand in hand exactly with what you as businesses want. The ability to get your business out there, to have a nice, smooth customer experience, no friction, and by friction, anything that can get in the way of you making that business grow, and tax is part of that. You also, in doing that, you're going to have that nicer relationship with the tax authorities. If they can see that you have demonstrable processes in place, if there are any people from the Netherlands on this call, the Dutch have this nice concept of a tax control framework. Having demonstrable process in your business, wherever possible, to have automation and touchlessness, it all lends itself to being a good taxpayer, will lend itself to not just complying for the sake of it, but getting a good light touch from the tax authorities, so you can continue on doing your business without the friction of scrutiny from the tax authorities, or without your own tax team being bogged down, or your finance team being bogged down in more and more questions from the tax authorities. Removal of manual processes, get things right first time, every time, in a systematized, demonstrative way. And I suppose a little recap, almost, if you like, as you go to new countries. Never presume that because you know how the UK works, you know how the next country works. It never quite works like that. There are some similarities, of course. People have always had to get tax right. They've always had to monitor thresholds here and there. They've had to report and comply. But some of these newer ones, the things in blue here, checking VAT IDs, uninteresting, but has to be done. Big potential errors and cost of money and business if you get those wrong. The concept of both compliant invoicing and e-invoicing. The more you go to more countries, the more you're going to have to comply with these kind of requirements. And to split those out, some of these are real-time at checkout. You can't delay getting the tax right to some later point. You can't necessarily delay e-invoicing till later. Got to get things right up front. You can't rely on people to make these decisions in systems. Not very scalable, not what the tax authorities want, lends itself to friction in the business. You can make systems work manually. You can plug rates and rules into the back of them to make these things happen. Little bias on the Vertex side, of course, but automation, the linking of systems so that are designed to meet these challenges will help that flow that much more seamlessly. And then a range of things downstream, reporting, compliance as well, the ability to have access to data to monitor those thresholds, something that has to be done as you think of business around the world. A couple of just meat on the bone, I suppose. So let's say you're non-EU, you're UK or American, whatever it may be. You're going into Europe, within the EU, 27 member states, means 27 different standard rates and a range of reduced rates, a range of different currencies. Even within Europe, outside of the EU, some very large markets in there that, again, you're just going to come to. They have their own rates, they have their own rules. They may be similar to each other and to the EU, but fundamentally you need to be ahead of the game, understanding the lay of the land of where you're going to come to and how you're going to manage some of these moving parts. Different currencies involves the right application of foreign exchange rate, for example. You need to charge your customers the right amount of money, but you need to make sure that you're paying the right amount of tax to the tax authorities in the appropriate currencies. It's just one of the bits of the jigsaw puzzle. You need to be assured, are you getting your FX rates from the right place, the European Central Bank, or whatever the equivalents may be around the world. Some countries, or I suppose a trade bloc in the world, in EU terms, the concept you see there, well, IOSS or OSS, one-stop shop. The EU has instigated a number of similar regimes to allow non-local and indeed local businesses to comply more easily around the EU. In the old days, it may used to be the case that even if you were in the EU, you ended up having to register with 27 or 28 member states back in the day, making 28 different filings. The EU have introduced some time ago the simplification. Often that's a warning word that things are about to get more difficult, but in this regard, a true simplification, the ability to register in one location and file in one location and to charge tax by reference to the rate where the customer is located. So possibly 27 different member states, but all being filed on one return in the one location. A couple of flavors of one-stop shop: the union scheme for EU businesses, the non-union scheme for non-EU businesses, the IOSS for imports of goods. Similar but different regimes, all designed to make sure, bottom line, you're complying, you're getting the right tax to the tax authorities at the right time. There's a range of extra rules here for those engaged in marketplace activities, which I won't go into today, but come with that extra layer of complexity. Who is responsible for making the tax? Is it the marketplace operator? Is it the sellers themselves? Again, all instigated by tax authorities to make sure tax gain is, for them, is as smooth and clear and obvious as possible. Again, I'd always say as a VAT person, from an advisory point of view, always seek local advice, because the way things run in the UK may be slightly different from the way they run in the EU. And each new country you go to will have some nuance or even a registration threshold that need to be taken into account. The point of a registration threshold, for those that are not clear, only when you breach that threshold might you have a requirement to register locally for tax and charge local VAT. That threshold can change wildly. It could be 10,000 Aussie dollars in Australia. There is no threshold in somewhere like Albania. If you make a supply of digital services to a consumer in Albania, you are expected to register immediately. That lends some businesses to take slightly pragmatic approaches when it comes to these low threshold countries. And many VAT countries, similar but different. But you will, any European business, like the Beatles back in the day, want to break America. Great place to grow your business. Lots of consumers, and not a small amount of money to be spent there as well. The EU, for those, the US rather, for those who haven't been there before, has a very different tax system. Not VAT, but sales tax. The color coding on the right is just an indication that it's not just 50 states, but it's thousands and thousands of local tax jurisdictions, all of which have the ability to charge taxes at a range, a very wide range of rates. Lots of changes to those rates over the course of the years. They have concepts that we really don't use very often in VAT world. Tier taxes, so in some places, clothing up to a certain amount can be tax-free, but if it reaches a certain threshold, then it's subject to tax. All layers of complexity that you as a business need to take into account. The concept of US nexus, if nothing else, state by state, needing to monitor your threshold in each of those states. As you breach it, you're expected to register to start charging local sales tax. And local sales tax can mean anything up to 8 different taxes on a single invoice. If you make a sale into San Francisco, California, taxes at the state, county, city, district level, all expected to be charged and accounted for there. and accounted for filings, monthly filings in lots of places. You do well in America, brilliant, great for your business. You will have a lot of compliance to keep on top of. Again, not really possible to manage that simply yourself in your own system. This is where businesses like Vertex have a business. We're designed to help with that underpinning of getting the tax right, keeping track of thresholds, charging the right tax, and helping business to report on it as well. Also, the concept of exemption certificates in the US for those interested in B2B transactions, something that doesn't exist in VAT world. Lots of US businesses may be exempt for one reason or another. They're a reseller, or they're a school or a hospital or a government agency. Again, all part of the jigsaw puzzle that you as a business need to be on top of to help both, not just compliance, but help making business go right. If you charge, bottom line, if you charge the wrong tax to someone in the US, bearing in mind the tax in the US generally goes on top of the stated price, you will have customers coming back to you and saying, this is not correct, I'm not paying this invoice, try again. Not a great customer experience, not good for cash flow, etc. So I suppose with those kind of complexities in mind, where do we come to? Where do you as business come to? You've got these great platforms, things like Recurly, to help you onboard as quickly as possible to get ready to sell. Together with a Recurly partner such as Vertex, the ability to look to get on top of those challenges for indirect tax, whether it's sales tax or VAT or GST or consumption tax, whatever it may be, to make sure that the nature of product is understood, product or service, to understand therefore how it's taxed, where it's taxed, at what rate might it be taxed, to keep track of the data around those sales, so you can make sure you're ahead of the game when it comes to registering for US Nexus or VAT, to make sure you're charging the right tax in those new locations you go to. Again, all apropos of a seamless checkout experience for the customers. Customer experience is really, really important. But then just to make sure that the business is seamlessly complying with those things that it needs to on the VAT side, whether it's VAT ID checks, whether it's statutory reporting, whether it's invoicing, and so on. And being cognizant of things will be different wherever you go with your business. For those in the subscription world, especially where those subscriptions qualify as digital services, you are very easily going to find yourself everywhere around the world from a VAT point of view. Places where you will never step foot on as a business, you will have tax requirements there. And until further notice, the way that's going to generally happen, register in these local locations, charge tax, register. The good news, I suppose, the tax authorities will make it as easy as possible for you to get registered and to charge a tax. It's kind of in their interest to do so. Be under no illusion. If you don't get these things right from the get-go, there are repercussions, and not helpful repercussions to business. Again, it can add friction. Your valuable finance team's time is taken up answering tax authority questions rather than forward planning for better business. And I suppose to pull that together in terms of the Curly and Vertex, those challenges I've been talking about from the indirect tax point of view all across the globe, that's what Vertex has been doing for the last 45 years, providing software and technology solutions that's going to help you through systems like Recurly to better streamline and manage your business. We're there to take care, or to help you take care of the tax compliance issues so that you can get on with the business of growing your business. So all those kind of elements I've talked about, literally getting the tax right, monitoring those turnover thresholds, whereafter you may have to register and charge tax, to be able to differentiate between different kinds of service and different kinds of product, to comply with invoicing and e-invoicing, to submit the appropriate tax returns in the right place at the right time, taking into account things like foreign exchange, all part of the overall jigsaw puzzle that Vertex has been helping businesses to manage through partner organizations like Recurly for the last 45 years. or so. And we're very excited. I think tax people are actually excited. The way the world has become a lot smaller in many ways. The digital economy means that even very small businesses can get very global very quickly. For those who are old school VAT people, it's very exciting that we have exposure to all these things that happen around the world. Not that exciting for business, because business isn't about getting excited about VAT. Vertex will hopefully, and Curly will help you take the excitement out of VAT to just comply in as frictionless a way as possible, so you can get on with growing your business in the best possible way. So I think as we come to the end there, I will firstly thank you for your time. I look forward to having these kind of conversations face to face with people as well. Anyone who wants to speak to any of us afterwards, love to continue this chat with a more specific focus on your particular business and your particular needs. For today, for the rest of this webcast, I think I'll hand back to my colleague Kelly. I believe there's been a Q&A box that's being monitored. If there are any questions that are burning on you now, throw them in there, and Kelly can throw them at me and Robbie and Mark. Otherwise, I'll thank you for your time today.
Thank you both. Yeah, we've had a few questions come in, so I hope you don't mind answering those that have come in. Any we don't have time to, we will follow up after the webinar. So I will hit off. Right, the first one. What happens if you don't check customer VAT IDs? Yeah, sure. I think I'll take that one. I guess the concept, I suppose the context first of all is, let's say I'm in the UK. I'm providing a digital subscription service to, let's say, somebody in France. Even if my customer is a private individual, more or less, at some point I'm going to be expected to charge French VAT to that consumer. However, the VAT rules apply differently in a B2B world. If I'm providing B2B, I don't need to register for French VAT. I don't need to charge French VAT. I can just charge without tax, and my business customer can self-accrue the tax. There's a particular regime in VAT world called reverse charge. My customer can look after it all. That's great. I don't need to charge tax. But I need to be assured that my customer is in business. I need to have actively validated the correctness of their VAT ID. I need to have received it, checked it against. There's a number of systems out there that in Europe. There's a VISE website and where you can check VAT IDs, part of Vertex Solution Set 2. The corollary to that is, if you haven't checked it, when the time comes for tax authorities to start asking questions like, well, why didn't you charge tax? Well, I didn't charge tax because my customer's in business. Tax authorities would be perfectly within their means at some point to say, well, we can't see that you proved out that VAT ID was valid. That customer has long since disappeared, or perhaps it was someone just typing in a random set of VAT ID numbers. Bottom line, you put yourself at risk for a tax authority to say to you, you weren't entitled to zero rate that transaction because, amongst other things, you didn't check the VAT ID that was given to you to exempt you from having to register locally. We would like you to register for tax. Oh, and guess what? You've been doing this for the last 4 years. We're going to go back 4 years and assess you for VAT on those disputed amounts. And when you're dealing with, well, in EU, Hungary has a VAT rate of 27%. You don't want to have to give up 27% of your income to pay over to the Hungarian tax authorities. So again, as ever with VAT, prevention is better than cure. Get your VAT ID checks in, just forestall any of that bad stuff from happening. Fantastic, thank you. And next question, is there a state in the US that is best to implement a subsidiary?
Well, I'm happy to take first punt on that. The immediate answer is Delaware, but not really. I don't know, Robbie, if you have any insights from your neck of the woods?
No, there are a number of states that offer tax exemptions from income tax. Delaware is one popular one that has that sort of exception, but there are some liabilities that go along with that. So in Delaware, you have to pay franchise tax rather than income tax, corporate income tax. So it just varies. It's best to kind of work with your team to figure out which states are best suited for the type of expansion that you're doing. Also have shareholder implications if they should be taxed or not. But Delaware is definitely a popular one for many corporations.
Indeed, and I'll just chime in from a sales tax point of view. At least finally nowadays, sales tax has grown up a little bit, and a bit like VAT, is a tax on true consumption. So in a way, it doesn't matter where you are. If you're providing, let's say, services, it's where that is being consumed that matters. So the US now has this concept of economic nexus. Now, nexus is a very US-focused word, similar but different to the concept of VAT registration thresholds. So wherever you're supplying from, you are expected to keep track of your threshold of your income per state, because at that point at which you exceed that state-specific threshold, you're expected to register and start charging local tax. Those thresholds, as ever, you'll find this if you haven't already, differ from state to state. Often there's like $100,000 or $200,000 and/or a couple hundred or 500 transactions. You need to monitor that and then charge tax in that place. A little bit of a sales tax history lesson. It wasn't that long ago, before a very famous tax case called Wayfair. Before then, you didn't need to charge tax if you were not physically in a state. So that led to some of the world's largest companies only charging sales tax in 4 states. Guess what? The state tax authorities have got big holes in their budgets too. Wayfair thought about this concept of economic nexus, where you as a business need to track your turnover per where it's consumed, because tax is going to be where it's consumed. And that's very much, I suppose, the global landscape of digital services. You need to know for sure where is your customer located. And for digital services, that's not always straightforward. Is it home address? Is it credit card address? Is it IP address? Is it something else? Again, business and indeed the Vertex solutions are able to take multiple addresses into account to make sure you're pinpointing the right place. So the direct answer to the question, for sales tax and VAT, it's not so important nowadays where you set up. You may well incorporate in Delaware in the US, but you need to monitor the consumption of the things you sell, because you can very easily legitimately find yourself having to charge sales tax in many, many hundreds and thousands of different locations across the states.
Fantastic, thank you both. You may have touched on this, but I will ask you, is there a threshold that triggers Nexus? If so, does it vary by EU country?
Yeah, okay. Again, I'll pick this up. I think I kind of answered that, and I'd lay money that question came from the US. Nexus, very much that specific US phrase, doesn't exist elsewhere, I don't think, in terms of monitoring the thresholds there. If you get Nexus in a state, you have to charge sales tax fundamentally. In the old days, you got Nexus by having bricks and mortar stores or people in the ground attending trade shows or whatever. Nowadays, it can be done remotely. And I think I said before, it varies from state to state, roughly 100 or 200,000 bucks. The similar but different concepts in VAT world is going to vary from country to country. And again, it varies slightly depending on quite what it is that you are supplying. If you're in the UK, only supplying the UK market, we now have a threshold of, I think it's 90,000, went up recently for the first time in a while, £90,000 before you need to register. But when you're looking at digital services around the world, each country is going to have its own registration threshold. Most of the time, they are pretty low, so you're going to find yourself with VAT requirements sooner rather than later. That one-stop shop I talked about, that has a threshold of, I think it's 10,000 euros nowadays. Theoretically, it's optional to register for this one-stop shop. You can, if you like, register in each of the individual member states, but you would only really do that if there are some very specific circumstances that make that useful, like you're on the ground in those places incurring VAT on costs. So it varies is the answer. No threshold in Albania, hundreds of thousands for each state in the US, 10,000 euros in the EU. Seek local advice. Take software, for example, that may have thresholds built into them. Always be cognizant of local rules. And one element of those local rules is thresholds. It varies, always varies.
Thank you. Robbie, did you want to add in anything there?
I think Andy did a good job
Yeah.
on the Nexus in the US and VAT registration in the EU.
Thank you. I think we've got time for one more if you both can. Last one, does VAT apply on refunds and credit notes?
Yes. Absolutely. That if you, it's fair enough, isn't it? If you account for tax on a sale, if you're then getting refunds or issuing credit notes, tax should also always be on those. And generally speaking, this is where what I would call tax points come into date. If you're raising a credit note for something that happened sometime in the past, generally speaking, the rate of tax on that credit note should accord with the tax point of the original sale a lot of the time. So again, in terms of having rates and rules built into your platform, this is where automation again comes in. Having a platform like Vertex, dare I say, with all those date stamped up-to-date rules, will make sure that credit notes are hit with the right tax. And it may be the case, across our customer base, you may well be using a subscription platform like Recurly. You may also have other processes going through your background ERP, where sometimes we see maybe credit notes are dealt with in those ERP systems as well as some other elements of the business. Irrespective of where systematically that refund is coming from, yes, you need to take account. Refunds and credit notes are within the scope of tax, and it behoves you to get the tax and the compliance in place for those as well.
Thank you, Beth. I've got one more that's just come in, so I think we've got time, so I'll ask the last one. Why outsource indirect tax compliance rather than keeping it in-house?
Okay. Compliance. How long have we got? Compliance can mean a lot of different things to a lot of different people. I'll talk about some of those elements we talked about today. Compliance in terms of getting the tax right. Insourcing can be building your own rates and rules in the system and keeping it up to date, versus using a third-party engine like Vertex to keep on top of those rates, have them all in place in the first place, and kept up to date. And like most things, it becomes a business decision. What's the cost to me in making it work myself versus potentially linking up to some software that's built to do the job? For any business, there comes a point at which the balance tips. Yeah, you can keep track of a few rates, no problem in a system. But when you start selling to multiple locations, having to manage VAT here and there, manage sales tax especially, the job of work is unsustainable. Better off using something that's going to automate those taxes and things like issuing invoices. Again, you can either manage that yourself or link up to a platform like Vertex that can help with that. Often when people talk about insourcing or outsourcing compliance, they might also mean the final VAT return submission as well. And then again, different things work well for different people. My own view, especially in the world where if we're talking about digital subscription, there's a fair chance you are going to be submitting taxes in locations where you're just not the local expert. You unlikely to have the in-house resources, the in-house knowledge to be able to know, well, this is how I need to manage a consumption tax return in Japan, and also this is how I need to interact with the authorities in a home rule state like Colorado. In those circumstances, it's a very neat option to be able to outsource, because you can rely on someone whose job that is. I suppose, in brackets, Vertex is one of those. So perhaps outsourcing where there's better expertise that you don't have inside, where you can rely on that, again, demonstrable process to meet that, then that's great. I suppose the flip side of that is some people, when they do have appropriate resource and capability inside, maybe you set up a shared service center of your own when you're a business of a certain size. Maybe at that point looking to in-source becomes better. Take in some software that can help you with that process, but is fundamentally your process. It becomes then cost to you rather than the cost of third-party outsourcing. Of course, there's a different dollar or euro cost to that. So there's no one right answer. It depends on circumstance, depends on need, depends on in-house resource. But I certainly think in the digital subscription economy, if you're dealing with tax filings all across the globe, bring in some help with that to take that strain away from your team.
Exactly.
That's great. Thank you. This concludes today's webinar. Any questions we did not answer have been collected and will follow up via email. So on behalf of our presenters and Vertex, I'd like to thank you all for joining today and wish you a good rest of your day. Thank you.
Thanks, everybody. Thanks for your time. Bye-bye.